SINA, we're going into the lunch hour, and I just want MMTs to understand that are new in the apprenticeship school is where a move can take place, which is the last part of the breakout of the day on SINA. And what would that look like and why? We all know that the white line is the 50-day simple moving average, and the aqua color line there is the 10-day simple moving average. You have a bear and bull fight in play right now because you got people shorting into it because it worked yesterday over here, dropped about $5 off the high. So you have those people doing the same thing again. What will happen is the short sellers have to come out of it above the white line as a 50-day moving average. And that's what they have to do. And in order to accomplish that goal, if they have a stop loss, meaning that their goal should be to have a stop loss, then that's going to trigger a buy to cover transaction at that price action line. So how do I take the last stages of a momentum trade between the public, and where does the public get triggered to get in the trade? Well, look at over here. You had this nice breakout. That's what I'm referring to as a short squeeze like this. And you can see the strong points. That means that everything in the application was working at its very finest. And those numbers were working in a way that the directional movement would work. So the public really got involved in covering shorts right through here. Then when they all got out up here in this first phase, you pull back. Well, now what we're looking for is we got all high readings. We're elevated there in the intraday range. We're 0.84. If that breaks a high, that's going to break that higher. That's going to also take that 10-day simple moving average. The higher you go above it, another round of short sellers are going to sell short, but bull buyers are buying right now. You can see the bull buyer in play. This is what I'm talking about. You clear that 116.90. Remember that this is live in action. This is not like we're just doing something. This is what happens at a major bull and bear crossing together, because one is selling short and one is buying, and you've already had the short cover because it's just the opposite of this bar yesterday. That short worked well, this big daily red bar yesterday. This one, though, it's more powerful to the upside. And that means that the longer that we stay above the current price levels, the more frustrated the bear will get, and then buy to cover. That's one good thing about the SMF Apprenticeship School is that we are making a market with the public. And where is that trigger transaction going to come into play? This is the most important thing about all of it. So that when you do make your transaction on the entry, you already have a mindset that you're only going to get so much above it, because it's the last part of where the short squeeze would happen. And you can see the 116.03s printing. You can see that this daily bar is much greater in value today than the previous daily bar. On a 3-minute level, using the SMF market maker application, you can clearly see here that we are burning at 96, and we're burning up here up at that teeny action price line right into resistance. So it's you understanding how the market triggers the last of the buyers into it. If you break through 1690, you're looking for 1775 at the very top end. Naturally, there's going to be that 1645 intraday that you got to clear. Once you clear that, you start getting up to those upper end of those price level actions, and you'll see where the 10-day simple moving average is. You can see it right here. That's a standard chart. This is the platform right here, and here's your prices. So we're going to go through a waiting period right now between that short seller and that bull buyer. So if the bulls really get control and the short says, hey, I'm giving up, that's how you're going to get to that upper price level.